Welcome to Moving Iron with Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. Thanks to John Deere for being the sponsor for this edition of Moving Iron Podcast. I've got Greg Machinery Pete Peterson here to talk about what's happening out there in the auction space. Greg, how you doing this morning?
I'm doing well, Casey. How are you doing?
Doing good, man. Doing good. It is, here we are in, this is the slow time of the year, right? We got everybody out in the field working, doing their stuff. And what used to be the slow time of the year has kind of just slightly slowed down. It's not necessarily a dead stop like it was when I was first started in the business because, well, the internet lets you do a lot of things in the cab of the tractor that you're not driving. So it's gives you a lot of opportunities to check out and see what's happening. So I guess, Greg, as you look around, what's your pulse right now? What's going on in the marketplace?
Well, I think you're right, Casey. It used to be May was really a slow time, and now it's evened out a little bit. There's so many bi-weekly online auctions on a regional basis. And I think auction pricing-wise, I would say, that little lift we saw that, it was very specific to me. It was like February 20th right through April. Auction pricing in good use, particularly with a little bit of age on it, just lifted just a little bit, not anything like we've seen in the past when corn and beans go up, but it was probably one of the most interesting little bumps I've seen, Casey, over 35 years, given that, the current realities, conditions for new are still soft, and, it's just a challenging time. So I would say through the month of May here, the first 3 weeks, again, good use is doing surprisingly well.
Yep. One thing you see happen this time of the year, which I've always thought was an interesting spin on the marketplace, because it's the new ones get delivered, the used ones come in, and you see some activity on those used ones, even though they may be too late in the season to operate or too early in the season to really think about it for next year, right? So I guess when you're looking around right now, we talked a little bit about some sprayer sales you saw come through, and it's, I don't say it's too late for sprayer season, because it's not, but typically by now all the sprayer buying decisions have been made. So talk a little bit about the Del Peterson auction you saw and the sprayer numbers you saw come through there.
Yeah, just yesterday, as we're recording this, it was yesterday, May 20th. Our good friends at DPA Auctions, they're a fantastic group. We've been working with them for many, many years, decades now, and they had some late model ones on their sale yesterday from around the country, which was interesting too geographically. So one at the top of the list, Casey, was a 22 model John Deere 410R, 347 hours from Illinois. That came in at $362,000, which I thought was pretty good. So far, the average auction price this year on a 410R, right in that neighborhood, it's just over $353,000, which interestingly is up 9.8% from last year. On a 410R, the average auction was 321, just shy of 321.6. And further interesting, when you look at the average dealer advertised price on a 410R, right now at machinerypete.com, the average dealer ad price is $416,528. So when you drift into our Machinery Pete ratio, average auction price divided by average dealer ad price on an item, that Machinery Pete ratio now is 84.8% on a 410R. Now, sometimes these smaller capacity units, whether it's a combine or, a sprayer like this, it just seems like our auction data, Casey, has shown over the years that there's more buying heat on the smaller units. Not everyone needs the max capacity, I guess. So we see the same thing with, on the combine side, like an S660 combine versus an S690 over the years. But anyway, that the 410R 362, they had a Case IH Patriot 4440, 22 model, 1,059 hours, up from Iowa and Minnesota yesterday. Again, DPA auctions that brought 210.5. That's the second highest auction price so far this year in the U.S. on a Patriot 4440. And then if you go Rogator, now this was higher hour. They had 23 model 1300C out of Texas, so again pretty far south, but at $2,300 brought 125.5. And then back to Deere, a little higher hour unit, a 22 model John Deere 612R, 2,244 hours out of Missouri, brought 195.5. Technically, that's the lowest auction price I've seen on a 612R. But again, it's 2,200 hours, quite a few more hours than we've seen on other ones.
Right on. Was this a consignment sale, retirement sale, with a little bit of everything? What was the sale made up of, Greg?
Yeah, just, DPA auctions. Check it out, folks. A great website. They do a lot of farm retirements in their online sales. And also they've been working with, co-ops and dealers on the application side for many, many years, decades now.
Yep.
Established quite a resource for moving used ones. So, yeah, just an online sale. And, again, out of Texas, Missouri, and Minnesota, Illinois, kind of speaks to DPA's reach on the seller side. And then, of course, on the buyer side, they get huge numbers there, bidders. So I don't know if these were co-ops or dealers. I'm assuming mostly dealer ones here. So, and one other older one I should mention, they had a 20 model Deere R4038 out of Missouri. Again, higher hours, 3,570 hours, about 124.5. Average auction price so far this year on our 4038 KC is $108,085. So, good bit over the average price there.
Yeah. First tractor I ever took to auction was with Dell Peterson auction. Way
What
back
was
when.
the tractor?
It was a Challenger. We did 65C, if I remember correctly. Way back.
Let's see.
Way back in the day. That would have been 2007-ish time frame.
So how nervous were you your first tractor taken to auction? You were very calm and collected?
I was pretty sure I was going to lose my job because it was my first auction experience. I didn't know what to expect. I figured they just sell for whatever. I didn't have any idea. I was so green, Greg. I had no idea what I was doing. And so when it sold for like half as much as what we had in it, I was like, well, it was fun working here. I enjoyed the opportunity. And when I got back to the office, I told my boss, and he's like, oh, it's better than I thought it was going to be. I'm like, all right, get to come to work tomorrow. Awesome.
Well, back, so that was pushing 20 years ago, back those 55s and the 65 Challengers. Mm-hmm. They weren't the easiest to sell back in the day on the open hard cash auction market, but always a good idea to trust Dell Peterson DPA. They do a nice job there.
Yeah.
What's not too I think the headquarters, aren't they out of Fremont, Nebraska?
Yeah, I think that's correct.
I always consider Fremont, Nebraska, somewhat the auction capital of the world because
there's a lot there. Yeah.
Also, at Jack Nitz, my friend, they did a great job. And I know off the top of my head, I'm forgetting some other ones there. But I don't know how big Fremont is, but a lot of auction activity there.
Yeah. Yeah, a lot of auction companies there in Fremont, surprisingly. So a lot of stuff going on. But yeah, that was a cool experience. And like you said, they was my first experience walking into an auction environment, and had a good showing. I can't remember where it was at. It's in somewhere in central Kansas. I don't remember where it was at. But
Kansas. Okay.
Yeah. But it was.
I remember back in the day, Dell Peterson. They so again, kind of pre-internet days, but they were one of the auction companies that would fax me their sale prices from their sales. So I'd get this, 20, 30, 40 page fax, their clerk sheets on all the sales. So I really appreciate their help over all the years with, working with our machinery P business.
Yep. It's a very, very cool how things have progressed over the years. Definitely. That's definitely for sure. All right, Greg, when you're looking at the market right now, I see a lot of, there's a lot of pent up demand, right? I think we see that, I think there's always pent up demand because, machinery is machinery, and there's always is the juice worth the squeeze when it comes to repair costs, those kind of things. But you start looking at supply. Now, all these things being said, you start looking at supply. First half of the year, typically you see the majority of new equipment get settled and sold, which then brings in a brand new group of trade-ins. I track combines, 175 horsepower tractors, sprayers, planters. That's kind of what I pay attention to, just because those are the market movers, right? When I look at, you start looking at combines, for example, you've seen a pretty significant jump in combine inventory out there. You've seen a bit of a decline, not a lot, but a bit of decline in the number of tractors that are out there. Planters are down a little bit, and sprayers are up a little bit, but not a ton, right? The biggest one out there that surprises me more than anything, just because of where combines were tracking, is the number of combines that got added back to the marketplace. And it feels like we're creeping back up on the number of machines that are out there, and we were down below 10,000. Now we're up above 11,000 machines that are out there. So if you start paying attention to that, Greg, I feel like the pressure that we see on the dealerships that are out there and retirement sales and the different levers that are being pulled right now just because of the way the market is, I'm anticipating an even bigger end of the year auction cycle than what I had already anticipated, and I was already anticipating a pretty big auction run anyway. As you look at the factors that are out there, Greg, what's your feel for that? And do you feel like there may be some more auction talk now than there was maybe, at the first of the year, maybe 2-3 months ago?
Well, good questions, Casey. I mean, I just finished working on our quarterly machinery Pete use values index report. Again, I started for the Wall Street crowd 15 years ago, but we use it for a lot of our commentary and stuff. So in that, we're pulling in the auction data from the past quarter, but then also, like you say, looking at supply and demand issues too. Also, we track, how many folks are clicking on combines or high horse tractors or planters at machinerypete.com. And it's interesting. I think where my head is at right now, Casey, is I'm comparing it to where we were a year ago. So I think the supply side, I mean, obviously dealers, still have some issues they're working through, but compared to a year ago, when I look at those supply charts, it's much, much healthier than where we were. I think there was a lot of angst wouldn't be a strong enough word a year ago on the dealer side in terms of dealing with the excess inventory. Now, what we saw at auction last year, it started about June 1st. We got, that's the rhythm of the auction season. And as a dealer, your customers get the crop in the ground. And then I would think, because now you can speak to it, you sat in the chair, but you assess your used inventory situation and then you make your plans. What are you going to do through the summer and the fall? And what we saw in 2024 was a freaking avalanche of dealers taking stuff to auction, late model tractors. Combine started in 23, of course, a year earlier, but sprayers, planters, not as much, but some tractors mostly. I think the supply issue is better now, but I think it was really interesting at the very end of last year in 24. November, December is always, last 20 years has been the hottest time to sell. So dealers, of course, very, very smart. Sell into that at the end of the year, your excess. I almost felt to me at the end of last year like we saw a little pause, like they were so aggressive. June, July, August, September, October, maybe trying to get ahead of it. That there was a teeny pause, and that pause kind of, to me, on the dealer side, just sort of continued early in 25. So it'll be really interesting now as we creep up on June 1st. My guess is that dealers would look and go, oh, okay, auction pricing. Obviously, we wish it was higher, but like on the sprayer side, that 410R yesterday coming at a 362 hard cash consignment online sale above the average. If I'm a dealer, if I got some excess, I'd feel pretty good about tiptoeing it out into the auction market if you have to. Now, you might be right that I think maybe at the end of the year this year, maybe a little busier than we saw last year. So every year is different. And obviously dealers working through their scenarios. Now, the added thing we have going on this year, I shouldn't laugh, but the tariff situation and just the unknown, how your customer mindset, what are corn and beans going to do here this late spring into summer. So we got to swirl it all together. And then if you're a dealer, you're making your decisions. Do we take some out? How much do we take out? But we'll be there to report on it and see how she comes out.
Yeah. Yeah. I think I'm looking at you're right. There are a lot of dealerships that went and did some auction activity and got rid of some inventory and pushed their way through, but there are a lot that didn't do anything. And I think the biggest pressure that I'm feeling from guys when I talk to them now is just the crushing weight of the interest that is on, $100 million worth of inventory type of thing, right? That's a big number. And, if you start looking at those numbers and you're talking, tens of thousands of dollars a day to keep that stuff sitting there. So I just feel like I think there's two things I want to make sure I preface here is that if you see a move in the crop prices. And you know how long it takes to react once the auction market settles down, and how long that lull is till the retail market starts picking back up. And it's typically 6 to 12 months that you start seeing a leveling out in the auction marketplace. You start seeing this trickle back to the retail side because, obviously retail numbers have come down to more in line with what you've talked about, like you've been talking about with auction values. But as you watch that move along, if we start seeing some good commodity prices, I think it could stir some of that retail activity as well as some auction activity too, just to keep things moving. But if things kind of stay status quo, man, I feel like there's going to be a bit of a move towards a higher auction activity than normal. Yeah,
the interest rate thing is the key there. Now, just the past few days here, when I think Moody's came out, what is today? Tuesday. So I don't know if that was Friday or whatever. They came out, last credit agency, to basically downgrade U.S. debt. I mean, from a AAA to AA plus, or whatever they call it. So the bond market is, I forget the term they're saying about their bond vigilantes, I think, are really putting pressure politically back on what they're trying to do in Washington, because these interest rates, I mean, you read the tea leaves, I mean, interest rates are going to go up.
Right.
Well, just like you said, if you're sitting on that excess inventory, the pressure to move this stuff, I mean, it doesn't matter if you want to take it to auction. You just have to relieve some of that pressure. Now, these units, I've watched 3.5 decades. I mean, it used to be, and it's all relative, right? I know $100,000 as a dealer used to be a ton you were paying interest on back 30 years ago. Now it might be 500 plus times X number of units. You don't got two stores anymore. You got 50 or 65.
Mm-hmm.
So yeah, I think we saw last year that avalanche I spoke about, and it wouldn't surprise me at all. Again, June 1st is kind of the buoy in the water. There'll be some key sales to watch. I know Wheeler, down our friends Chaz and Kirby Feck down there and their great team have a huge sale. I want to say it's usually the third week of July. And that one will be interesting because last year we went down to Filbert for our Machinery PTV show. And they always sell from like 8 in the morning till 9 at night, 6 rings online, in person. But I think it was 15 to 18 dealers had equipment there. And I mean a lot. And to me, the prices given that volume was pretty amazing. But Chaz and Kirby do a great job there. So I would guess we'll, see quite a bit of inventory there. So if your powder's dry and as you're able, it does bring up a point you raised earlier, Casey, on the farmer side now. If we flip it and you haven't bought new for a couple of years, you're tightening your belt as you have to. Looking ahead into 26. So what I saw happen last year was that farmers, what they would say is, hey, we're good. We're equipment-wise, we're set. But then when the combine price fell enough, okay, well, I'll get into that S670 or case or whatever at that price level for a second machine or whatever. So, farmers are very savvy. They're watching the numbers just like we are. So, it'll be really interesting. But that is a factor we have to consider. Again, the sales of new have been down now for a couple of years.
Yep.
So the farther you stretch that out, that creates pressure on the farmer side.
Right.
Because number one thing they got to have is reliable equipment to spray, to plant, to harvest, whatever. They can't get around. You just cannot get around that fact. So, it's going to be an interesting rest of 25 for sure. Absolutely.
I think the table's being set to see what this looks like. Again, we've talked about it here where we see this. I've talked about it. We're coming out of this. Looks a lot like 2008, 2009, moving into that 10, 11, 12 period where the ramp backup time for the new side is going to offer some opportunities for late model, low-hour equipment to be sold and kind of right-size the fleet, I hope, on the used equipment side. So knock on wood, all that stuff comes together, and we're going to hopefully we'll start seeing that happen. Typically that late July, early August timeframe is when the fuse gets lit for the auction powder keg that goes off there in November, December. So we'll watch what happens there. But that's when you start seeing those pieces start to fall into place. And it sounds like to me there's already some stuff out there that's going to take place during that time frame.
Yeah, it's again, the farmer side. We always see that activity with retirements, online sales. Of course, more. And there's pressure on the farmer side too. We saw it early this year with on the lending side was tightening up, particularly on the farmers on the younger side who don't have all the equity. So there was pressure there. We were seeing some excess farmer equipment items. The terminology was wordsmithed. Reduction
Sure.
sale, whatever. But the lender was driving the bus. You got to move some stuff. So that now we sort of see like everything is smoothed out because the onlineness of the auction world, the market's always there. It's not like it used to be like, here we are in May, there's no buyers. It's like there's buyers out there now. So it'll be an interesting rest of the year for sure.
No kidding. No doubt about it, man. Well, Greg, appreciate you being on. Folks want to reach out, get you to come speak. The best way to do that, just go to machinerypete.com and click on the contact button there.
Yep. Hit machinerypete.com or hit me on social media. And folks, we should mention you can come hang out with Casey and I August 21st, Farm Journal Yield Academy,
That's right.
In Rochester, Minnesota. I've been living here 35 plus years, so come on up. It's the last day of the Pro Farmer Crop Tour at Rochester down at the Civic Center. And I think we got a couple seminars at 1 in the morning, 1 in the afternoon, Casey, talking machinery.
Yeah, we do.
Come on out, folks. You one-on-one, ask questions, and it should be big fun.
Yeah. We're going to record a podcast up there together live, I guess, from what I understand. And they're going to let me talk to people about equipment, which that's shocking. And they're going to let you, obviously, because you're the seasoned professional, So
we'll have fun. It's a chance, again, it's the same with auctions. People come up and they read and they follow along, but it's always been fun, Casey. You know how it is when someone says, hey, Casey, I've got a 3-year-old, Magnum tractor with X number of hours. I'm thinking of trading it. So what do you think I should do? So, answering people's individual questions has always been really fun.
Yep. Yeah, I get a few of those from time to time. So that'd be great. Well, Greg, thanks for being on the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip Nellinger is with Blue Reef Agro Marketing out of Morton, Illinois. It's nice to come on and talk about what's happening in the world of commodities. Chip, how you doing this morning?
Hey, doing well, Casey. We're getting some much-needed rain here in parts of Illinois. Not everyone's got it, and I know it's stretched across other states that have been a little dry too. So a little bit chilly. It kind of feels fall-like. It's kind of getting me into football mode right now, but obviously we're got to get through summer here first, and it's been welcome rain, but man, it's pretty chilly out. I like it. I like it.
Yeah, we had the same weather pattern out here. I mean, we've been incredibly dry. We've had some really good rains come through, but it's been very cool. We had like week and a half ago, it was like 92 or 3 degrees, and now I think this last 10 days we've been in the high 50s, low 60s for the most part, and been fairly wet. So I've been it's pleasantly surprised. But you brought up something there I think is worth talking about is you watch these planting progress reports and planting condition reports and those kind of things. And I think it's something we need to point out is that it's not as widespread of great conditions that people want to make it out to be. It's kind of a feast or famine, it feels like, in the Corn Belt right now as far as weather goes.
Yeah, it really is. And that's the funny thing, this market is so fickle. Some weeks it's focused on a bit of information or a piece of news that, really shouldn't matter. And other weeks it kind of disregards news that you think should matter. But really since spring started, going back all the way to Mother's Day, really, we had this early planting and the market thought, it's all perfect everywhere. But, that southeastern tier of Corn Belt, southern Illinois, basically you draw a line from St. Louis to, maybe Fort Wayne, Indiana. Everything south and east of there was far less than perfect and still is. And I think maybe finally this little rally that we've seen in corn, the market's maybe waking up to the fact that, hey, we do have some issues here. We're quickly approaching that final plant date where producers in the South have to make a determination. I think a lot of those dates in the South are coming up on the 25th of May, and it's been so wet. They got some more rain. It's not what they need, and they're really struggling to get crop in the ground. We have producers, that we talk to in portions of Kentucky, Tennessee, that are definitely going to switch some corn acres back to beans because it just got too late and too wet. Other producers in portions of southern Indiana, southern Illinois, that are getting some crop in the ground, some corn in the ground, but it is definitely getting late for them, and that puts them, at risk. If you get some heat this summer, it really hurts those crops this late of a planting date. So, I talked to a producer yesterday in northern Illinois. It's one of the driest areas. If you look at the drought map, I think they got a little bit overnight here, but they just hadn't got much rain out of this system. So there's pockets of extremes both ways, Casey, and it seems like that's pretty normal every summer, but sometimes the market just wraps it all up into a ball and makes this expectation that everything's perfect. And so far this spring has been, less than perfect. It's been perfect in places, but it has definitely not been everywhere that it's been perfect, a perfect planting season here.
Yeah, for sure. All right, let's jump over and talk about the cattle market, man. You look at the cattle market, and I feel like the market now is every day is the day it's going to go backwards, but it keeps going up. So I guess as you look at that, Chip, what are you seeing right there?
Yeah, that's like you're painting, right? You're painting the floor, and it's like the cartoon. You're backing yourself into a corner, and you realize, we didn't leave ourselves an out here. We got to walk through wet paint, but we just keep going, and you back yourself into a corner so far that you really have no room to step anymore. That's kind of like the cattle market right now. The futures did have a break here last week, almost $10 off the highs, but yet the cash market stayed steady to higher. And, as you look at a long-term seasonal chart of the tendencies of both the cash cattle market and the futures market, about right now is when you put kind of a spring high in, peak, and then have a sell-off into, midsummer. And I think the futures started that thinking, okay, the cash market's eventually going to break. It got this huge discount, north of $10 discounted where the futures were to the cash market. In some areas of the plains, it was almost $15 discounted to where the cash market was. So the futures market is anticipating a break, yet the cash market is still sitting there saying, no, we can't get enough cattle, and we got to, go higher every week in order to get the cattle we need to fill the pipeline. And the box beef market continues to rally too. So we are just shaping up for some sort of a real issue here. I don't know. We've talked about that before in months past. I don't know when it will happen, but man, this thing won't end well, and it's almost like we backed ourselves into a corner with no way out because producers have made some money, feedlots have made some money. Cow-calf guy, finally is making a little bit of money here, and feeders continue to scream higher. I talked to a producer last week that, is looking at laying feeders in for nearly $3,000 an animal. It wasn't that long ago. They were $700-800. So you're talking about an astronomical amount of capital that it takes. Supplies are tight. Demand's still good. We haven't got to a high enough level yet that kills and chokes the demand off. So this thing is just, like a powder keg and waiting for somebody to light the fuse. And, I don't know where it will end, how it will end, but it probably will end with a lot of pain somewhere, unfortunately. So it's very tantamount, I guess. I don't use that word very often, tantamount. The producers, feedlots, just stay really current, use the tools out there to manage the risk as well as possible, because when the downside comes and the funds decide they've had their fill of being long cattle, they've made a ton of money the last 3 years being long cattle, that day will end when they need to take profits and pay their investors. And when it happens, you can break this market $20-30 in the blink of an eye, and really for no fundamental reason whatsoever. That's probably how it will end, is on bullish news where we think the market should continue higher, and you wake up and you're like, why are the futures still breaking? And that's typically how it ends. but so far it looks like we're not quite ready to put a top in yet.
Yep. So how's this affecting the hog side of the protein market?
Yeah, hogs are kind of sitting there in their own right. There's a lot of hog cattle spreads where, that does affect things. There's a lot of intermarket spreading in the grains and now the livestock markets for the last few years. So that does affect things. But hogs are sitting here over, on their own right saying, man, even though we've, got this trade issue with China, we still continue to export a fair amount of pork. We've got summer month hogs that are, historically at pretty good levels here. We're still ahead of the prime demand season as things warm up and grilling season, gets kicked off. And, things still look pretty good for hogs, but they haven't seen the huge rally like we've seen on the cattle side. Obviously, there's been, some switching and some demand, pulled over out of beef to pork and poultry with record high beef prices here. And that has helped the cause. But they're holding their own. It's not a decisive, wildly bullish rally. We see some back and forth in the hog market, but in its own right, you look out there at summer month hog prices and, still pretty decent for where meal and corn prices are sitting today.
Yep. All right, let's talk a little bit about what's going on over in the grains market here. So we've talked a little bit about the weather. You talked about that. It does feel like the market right now is looking at something like, okay, we should be seeing a weather pattern right now, and we need to get the weather back into the mix, because about every time you see we get a little rain, you see some move, or it doesn't rain for a day or something like that, you see some of that playing in there. As you start looking at corn acres that get planted, you just talked a little bit about that, about some producers you talked to switching some corn acres to bean acres. How do you feel like that's going to play out, and how far away are we from some kind of a weather related story? I mean, you see some stuff coming out of Brazil that's still showing that to be a pretty good market down there. But I guess as you're looking at what we see happen up here, especially on the wheat side, what are some of the triggers you're looking for?
Yeah, I think as it relates to corn, you're really now going to start focusing more on the weather, right? And these rains that have come through the last couple of days have definitely been beneficial. But I think we traded that forecast last week, and the market has started to rally, which tells me that we probably went a little too low for that point on the calendar. The funds ended up with a short position of about 50,000 contracts in corn. They dumped about 230,000 contracts of corn really in about 4 or 5 weeks from the highs in mid-April. So now the funds are short corn, 50,000 contracts. They've been short, 110 to 130,000 contracts of wheat for it seems like 2 or 3 years now. And what that tells me is there's no risk premium in the market. Crop conditions on wheat actually went down 2 percentage points on Monday afternoon. I think that was a little bit of a wake-up call to the market, because with some of the rains that have been around, I think the market assumed that wheat would continue to improve. So there's no real weather premium in the corn market. And as you get towards the end of May and we flip the calendar to June, that weather becomes much more critical. I would argue that even with early planting in corn, most areas, like we talked earlier, been very cool, been a little bit wet, not a lot of sun here, especially in Illinois. And that crop that even got planted at or just slightly before Mother's Day just sat there and didn't do anything. It took a while to get out of the ground. We had a lot of people rotary hoeing, trying to get corn up and emerged. And so my argument is the benefits of that early planting really, we lost that with the weather conditions we had. So what that tells me is that a lot of corn is going to be kind of piled up here and, affected by any hot, dry weather that we see later this summer. So I think weather is going to be a huge issue over the next 60 to 80 days for corn. You're coming into the end of the month, and for no reason, wheat has started to rally. We're 35, 40 cents off the lows in wheat, and everyone's searching for why. What's the news? Well, there really isn't much news other than the fact that we just got too far to the downside. We factored in the most bearish news, and now the market's starting to rally a little bit. All you need is that spark, whether that's from Russia, from Ukraine. China has been kind of rumored to have a really short wheat crop and possibly needing to import some wheat. India is kind of floating along, and they may need to eventually import some wheat. Saudi Arabia just imported some wheat from the United States here earlier this week. And so I think prices are low enough in wheat to kind of stimulate some demand out there. And the market, I think, has factored in a big crop here domestically in the United States. And then, everyone's scratching their head saying, why are we rallying, right? We're about to start harvest and we got this massive crop and they've got rain and, it's easy to forget that it's a futures market and we may have already priced in the biggest crop in wheat. And what would surprise the most amount of people, myself included, is you rally wheat all the way through harvest off of some demand and, other news outside the United States. So that, just keeps the volatility even higher because these markets seem to make weird moves that don't make a lot of sense and throw people, off of what they normally think the market should be doing.
Yep. Okay. All right, let's talk a little bit about oil for just a minute on the energy sector side. Oil has been floating around that $60 mark. Mid to upper $60 mark here for probably, I don't know, feels like 2 months, man. Just been kind of floating around there in that area. As you look at oil right now, obviously the demand's not there, or there's not much of supply. Which one is driving the market right now, Chip?
Yeah, well, I think it's a little of both. It seemed like the upper 50s to low 60s, just call it $60 a barrel for a round number, seemed like a pretty good equilibrium point in crude oil. And it's some of both, right? I think there's some expectations that maybe the world economy had slowed. Maybe this tariff situation was going to slow things down a little bit from a demand perspective. And also OPEC was kept pretty steady on their production. They didn't drop it or reduce it like some people thought. So I think they're kind of turning the knobs on both sides of this and kind of got the supply and demand, kind of normalized a little bit to where somewhere in the upper 50s to low 60s was kind of a fair value. Now, just the other day, there's some talk coming out that maybe Israel is getting set to bomb Iran and some of their nuclear facilities. And obviously, when you see that type of a situation, you add a little risk premium in there. So that's the unknown is always, it's not just the last year or two. It's been since they introduced the futures market in the energies, has always been what's happening in the Middle East because there's such a huge supplier and obviously a lot of political turmoil there. So that is something that could really add some risk premium fast if something were to escalate and you have actual Israeli bombs falling into Iran. Obviously, the crude oil market's going to put a lot of risk premium in fast, and you could see a 70 in front of it very easily. But barring that, I think it's probably a good sign that we can, build a base here at $60. I think low 50s into the upper 40s is a sign that things are not going well at all for the world economy and demand. Obviously, you get north of 75, say, and something's probably going haywire as far as, something flaring up in the Middle East between Israel and Iran, most likely.
Good. All right, last thing here, we're looking at all the trade deals that we've gotten done Trump and his administration have gotten done over the course of the last few weeks here. Like we were talking beforehand, there's just not a lot of trade going on right now, but there's all these deals that have been done. I guess as you're looking at this, Chip, what are your thoughts and what do you think some of the upside of this might look like?
Yeah, I think that's one reason why maybe the grain markets and even the livestock markets have stabilized. They've quit going down. They've put a little bit of a bounce in. Is that, when we paused those tariffs for, 90 days or whatever, it kind of took the market, out of, oh, no, it's going to get worse and worse and worse and cause some short covering in here. The thing that concerns me a little bit is, you hear all this news. We got a deal with China. We met with them for 2 days in Switzerland. And, there's a deal with China. There's a deal with India. There's a deal with the United Kingdom. It's all great. But yet the news dies down 3 days later and there's no details, right? There's nothing certain written in stone that says we have a deal with anyone yet. And that is what's concerning a little bit. So in the short run here, in the 90-day pause on the tariffs with China, and, we're still talking, supposedly to a lot of these countries, we need the market, not only the grain livestock markets, the financial markets are going to need to start seeing some actual, details on here's their signed written agreement. Here are the details on the trade agreement with some countries, or we're going to start going back the other way, right? That increases the uncertainty, makes the market assume that tariffs are going to come back after the 90-day pause and that things are going to take a turn for the worse on relations, especially with China. And then it will be a whole nother, selling wave in there. So, we need to get some certainty in this market and some announcements on some concrete details and written agreements very soon, or you're going to start into that whole thing again where the market hates uncertainty, everyone sells it, and if it's going to feel like the world's ending again because all the flare up of the trade war is going to come back. But it seems like we're in a little bit of a lull here, obviously, and that's allowed the markets to come back, but it's only temporary if we don't start getting some real concrete details, within the next few weeks here.
Right on. Okay. All right, Chip, good place to stop. Folks can reach out to you, get more information about Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just give us a call at our main office here in Morton. It's 309-550-7213. A lot of risk out there. Obviously, volatile markets. We'd love to chat with you about what you're doing specifically with your risk management plan.
Right on. Chip, appreciate you being the podcast. We'll catch you again next time.
All right. Thanks, Casey.
Stay tuned for more Moving Iron podcasts after these messages.
They are mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. I've got Josh Ladd on to talk about what's going on with sprayers over at John Deere. So, Josh, how you doing, man?
I'm doing well. Thanks for having me. Excited to talk about sprayers.
Yeah, me too. Josh, before we get started, introduce yourself and what you do for John Deere and how long you've been there.
Yeah, so my name is Josh Ladd. I'm the go-to-market manager for John Deere's application portfolio. So from See and Spray, floaters, sprayer spreaders, 4023, you name it, if it's in the application lineup. I have the opportunity to collaborate with our dealers and our field teams on what's new, what are the exciting things we're bringing to the market year over year for our customers, and just making sure everybody has a really good pulse on what we have to offer and where we think our products can add value, whether it's reducing herbicide, increasing productivity, maximizing utilization, and kind of anything in between there.
Okay. Well, let's start with the easy stuff first, and I'll work our way up to the hard stuff here. Let's talk a little bit about turn automation, what that looks like, and how that's working with sprayers now.
Yeah, so we were really excited that for model year 26, we were able to officially bring AutoTrack turn automation to our sprayer lineup, whether it's 400, 600 series sprayers, spreaders, the 800R floater, or even with our Heggie lineup of high clearance machines. A lot of our customers have been asking for this for a while. We've had the capability on our tractors and combines for the last few years. And so we were really excited to round out the portfolio this year with our application equipment. Essentially, as the sprayer enters the turn, the operator can set the turn width from smaller up to wider turns. They can set the turn speed. And then as the machine enters the turn, it will automatically go from AutoTrack, line 1 to the next appropriate AutoTrack line. So it mitigates and reduces a lot of the crop damage that you may sometimes find when you go to manually complete the turn, and you maybe under or overshoot that AutoTrack line, and then you got to kick the sprayer back over and run over some crop as a result. It also helps maintain a nearly perfect pass when we think about application quality, the product that's applied to the crop, and it really just streamlines that entire process. We are turns only to start. So for customers that are going to be demoing and running the tech this season, we're not quite to speed yet, like we've introduced with tractors and with combines. But we're very excited to now have the capability on the sprayers, and excited for folks to be able to run it later this year.
Right on. All right, let's talk a little bit about BoomTrack and AutoTrack. You got AutoTrack Vision 2.0, and you've got BoomTrack 2 Pro. Talk a little bit about those two products and what they're doing for sprayers.
Yeah, so BoomTrack, when we think about that, that's our stability system, right? When we think about our sprayers, at the end of the day, they are trying to kill weeds as efficiently as possible. And what we have found is as we've evolved over the years and our boom track sensors and IMUs and all of the tech that kind of goes into the stability system has gotten more advanced. Right along with that is the ability to just really have a stable boom that sits with the crop as you complete your application passes and manage your hills and terraces. And so with Boom Track 2, compared to the previous system for Boom Track 1, we did see, I believe it's about a 20% performance boost. We've had Boom Track Pro 2 as kind of the standard now for a lot of our sprayers for the last few years, but there is an option out there for precision upgrades for customers that are running an older John Deere sprayer that would like to go from Boom Track 1 to Boom Track 2. That's something that we now have available through precision upgrades, and just talk to your local John Deere dealer if you're interested there. The second one with Recirc Reclaim, I believe that was the other product that you talked about. Again, that's become pretty synonymous with John Deere sprayers these days. It goes hand in hand with our ExactApply technology. But at the end of the day, again, it's really just helping the operator be as efficient as possible and have the product ready to go at a moment's notice. And so when we think about recirculation, the plumbing is continuously keeping the product in motion and maintaining the rate and pressure. And so as with ExactApply, we have the ability to toggle nozzles on and toggle nozzles off on the fly. And recirculation makes sure that we have pressure throughout the boom as we're toggling nozzles sections on or toggling sections off. With Reclaim, when you think about when you're done spraying a particular product for the day and you still have stuff left in the tank and in the boom line, you can reclaim everything into the primary tank and then remove it from the sprayer for storage. But previously, you may have a guy that's sitting in the field and goes to blow everything out and then goes through the ridge cycle before they load the new product on the sprayer. And with Reclaim, we can now take everything that's in that boom, pull it back into the machine to just help save some of that additional product there.
Yeah. Plus it makes it cleaner too, easier to clean as well as and less time to do that when you reclaim all that and then you can flush water back through the system. It's
100%.
Time consuming. So yeah.
100%. Yeah, completely. Yep, you got it.
So the next three are really kind of something they all kind of build up to what you're talking about. But you have individual nozzle control, which Ink Pro, you talk about that, and ExactApply. So talk a little bit about ExactApply and individual nozzle control and how those are working together.
Yeah, so somewhat similar systems, right? Again, at the end of the day, we're trying to kill weeds as efficiently as possible at the beginning of the season, and then we're trying to be as efficient with our later season fungicide, insecticide, depending on where you are, your pre-harvest or desiccation passes. And so we've had some foundational nozzle technology the last couple of years. Individual Nozzle Control Pro, we'll start there. That's a 5 nozzle turret system that gives row by row control, 15 hertz pulsing. That one is unique. It goes back a little bit further. So if you're listening in and you have a 2008 or newer 4030 series, 4 series, or 400-600 series sprayer and want to add nozzle control to your machine, Individual Nozzle Control Pro is definitely an option for you there. It's going to help save on some product, right? When we think about just that ultra precise application, the risk of over application or under application does become reduced. Also, as you think about a sprayer, if you're maybe speeding up or slowing down for whatever you may have that you're dealing with in your fields there, we're able to maintain that pressure. So again, not under applying or over applying at any given point in the field. ExactApply, that's really become synonymous with our sprayer technology. I would say that's really more of a foundational piece this year, or not this year, but in the last couple years. And that's a 6 nozzle turret that, again, is that row by row control. We do have precision upgrade options that go back, I believe, to 2018 or newer sprayers. And so where Individual Nozzle Control Pro is going to go a little bit further back. If you're 2018 or newer, I would really encourage you to take a look at ExactApply. It's a 6 nozzle turret system instead of a 5 nozzle turret system that can do 15 hertz pulsing or 30 hertz pulsing. But again, it really has become. I often joke that the two things you sometimes see with sprayers are, if you go to a front boom, you generally don't go back. And once you go to ExactApply, you generally don't go back from there either. Just the level of control that it gives the operator very seamlessly on their Gen 4 or G5 display, the ability to maintain rate and pressure, again, as the machine speeds up, slows down, enters the turn, accelerates through the turn. If you have areas of your field that you need to shut off the nozzles, if you have gophers that you're fighting, or if you've got slugs that have chewed up a part of your field and you don't want to spray and save that product, you can do that on the fly with ExactApply there too. And so again, I would really consider that to be one of our foundational technologies that a lot of people have gotten comfortable with over the last couple of years, but we're still very excited to talk about it for folks that haven't had a chance to experience it firsthand.
Yep. And lastly, building on that ExactApply, you get, now you're looking at how it works with Seed Spray. And
for sure.
Seed Spray, You've got 3 different levels of Seed Spray, right? You've got Select and Ultimate. So talk a little bit about Seed Spray and how that works.
So it's really the perfect segue, because across our See and Spray portfolio, ExactApply is the foundational technology, right? We have to have that ability to turn nozzles on and off on the fly, and then working in conjunction with that recirc and reclaim that we talked about, having that pressure at a moment's notice. See and Spray takes that to a new level and uses a combination of cameras and computers that are running models that we've developed behind the scenes to make decisions in real time on when and where to apply product. And so, as you mentioned, we have 3 different products within See and Spray. The first was See and Spray Select. We introduced that a few years ago. And that system is really just looking for the colored green. So it works really well for our small greens customers, or maybe customers that are doing a very fallow heavy program, right? Where you're looking for those green weeds and grasses against a primarily brown or black soil condition. We then introduced See and Spray Ultimate. That one's been out for a couple of years and is still a showstopper for some folks when they see it for the first time. But it's a split tank design, so able to do 2 passes in one. You can run a residual product while simultaneously running a non-residual. So as you start, like as we were going to start here in Iowa, where I'm at, over the next couple of weeks with doing our post-emerge passes, you can still put down your residual product out of our larger tank while simultaneously running the non-residual of your choice and doing a targeted pass while simultaneously putting down that residual product. It's 36 cameras and processors, 36 cameras and 10 processors that have in-season models. So it builds off the green on brown to a green on green model, where we have corn, soybean, and cotton opportunity, where we can differentiate a weed or a volunteer crop of another type against the crop that you've told the machine that you want to spray. We're very excited about that. And very bullish on the value that it's going to bring to customers both today and into the future, as we continue to make software improvements, introduce new crops, enable the machine to run at higher speeds, narrower row conditions, and kind of everything in between. The last product that you mentioned is See and Spray Premium. We first introduced that as a precision upgrade kit, going back again to 2018 or newer John Deere sprayers with ExactApply. The idea there is that if you have a sprayer already and you want to maybe dip a toe in the water with See and Spray, you can now equip the 36 cameras and 6 processors on the machine that you may already have in your fleet to unlock the corn, the soybean, or the cotton functionality to be able to begin to use and be more comfortable with the See and Spray technology as you maybe consider, do I want to step up to that 2-tank system with See and Spray Ultimate? And See and Spray Premium, we now have available not only as a precision upgrade, but also from our factory as a factory installed option. And then this year, we were excited to expand full availability to the Hegi STS-16, as well as to the STS-20 on the Hegi side as well. So for customers that are looking for the largest tank size that we have at 2,000 gallons on the Hegi side, you can now get See and Spray on that sprayer as well. So we were very excited to bring that to the portfolio.
Right on. Well, that's a lot of information there. Sprayers are... you start looking at how much, I used to call them a fingerprint back when I was at the dealership, because everybody wanted their sprayers set up so differently. And now with the option that you have here, there's still a lot of things that are going to be, specific to a certain producer and how they're doing their operation. But the things about this is that you've made a lot of the things about sprayers that were complicated and hard and time consuming pretty quick. You even talk about, what it takes to do front fill on a sprayer now, and how the time that it takes to that machine now compared to what it used to be. All those kind of things really make a big difference in
for sure
how sprayers are being operated on farms.
Yeah, absolutely. I think one of the things I'm really proud of our team day in, day out, when we think about the job of spraying, we know that the sprayer is a big part of it, but it's not the only part of it. So we think about all of the different parts when it comes to tendering, logistics. What's your water truck doing? Where's that running around? How can we get all of the equipment into operations center so we can more efficiently manage the logistics side of it, right? And then with all of the data that we provide back to customers through operations center, in the case of See and Spray, we're providing back an as applied map and weed pressure map. Like, that's insights in real time that you can then turn around and talk to your agronomist or your crop consultant or whoever you may work and say, all right, here's what we're seeing at the start of the season. Are we comfortable with this? Do we feel like we need to maybe pivot somewhere? Are we seeing an increase, year over year in some weed resistance? And where do we maybe need to look at adding a different product to the mix? Right? Those are all insights that we can provide back to customers now so they can make the most informed decision, both in season and then after harvest, when they're in that planning stage of, okay, here's what we saw this year. What are we going to do a little bit differently next year?
Right on. So, did we miss anything, Josh, that I didn't ask or that's top of mind?
No, I think we hit the big things. I think, we talked about some of the great ISG updates that are coming with AutoTrack turn automation. One other new update that we brought this year that'll be for 400, 600 series sprayers on the John Deere side only is AutoTrack Vision 2.0. So for customers that were running the 1.0 system, this is a complete overhaul that'll be available starting model year 26 from our Des Moines Works factory. But it's a 2-camera system, a stereo camera on the roof or on the top of the cab that's looking out in front of the machine, and a mono camera that is positioned on the underside of the machine that's looking back at the tires. And for customers that maybe aren't using AutoTrack or AutoPath, but still want to make sure that the sprayer is pinpoint accurate for where it is in the field and where the tires are in relation to the row, I would definitely encourage they take a look at AutoTrack Vision 2.0. With the new system, we had a couple productivity improvements. We can now get into the crop about a third, 33%-ish earlier at 4 inches crop emergence, up through about 90% crop canopy. We're also able to run it up to 22 miles an hour. So, if you've got some really limited windows for application, definitely a technology worth looking into. And again, I won't get into too much more detail, but if it sounds like something you might be after, definitely talk to your John Deere dealer or visit Deere.com for more information on that one.
Right on.
Actually, I might add one more thing if I can.
Go ahead.
The last thing that I might say before we wrap up here, and I think we've gotten a lot of questions specifically on the See and Spray side of what are some of those non-biased third-party groups, local or land grant universities, third-party partners, what's their experience been in the trials that they've run? And again, I would encourage you, if you're listening in and have questions on See and Spray in that capacity, definitely talk to your John Deere dealer. We've had some pretty compelling university studies specifically that have been released the last couple of years through Iowa State University, Purdue University. The University of Arkansas just had a new study recently that was looking at targeted application opportunities with See and Spray. And one of the things that I'm personally really interested in, and I'll say John Deere is very much doing our own agronomy trials to come to our own conclusions. But one of the things that we are starting to see from these university partners is an actual yield improvement in the areas where we do targeted application. I think talking to customers that have been interested in the technology and customers that have maybe experienced it for themselves, there's been this general belief that, hey, if I don't have to spray 100% of my crop and my crop doesn't have to metabolize all of that product, there's got to be a benefit there. And in the trials that we've seen so far, where they're looking primarily at soybean to start, we've consistently seen anywhere from 2.5 to 4 bushel a yield improvement in our side-by-side trials that these universities have done, where we're comparing traditional broadcast application compared to See and Spray targeted application. And so we feel actually really great where we already knew that there was an opportunity to save product and not have to worry about a performance loss compared to our broadcast standard. But we're now starting to see what I think is incredibly exciting, which is not only are we able to save product at the beginning of the season, but we're also seeing that now come through to tell the yield story at harvest as well. And so that's something that we are very much going to be keeping an eye on here in the seasons to come, just as we continue to prove that out on our side, in addition to the ongoing research with some of the universities that have access to the tech.
Right on. So,
absolutely.
Looking forward to see how sprayer season goes this year, and we'll catch up with you again soon, Josh.
Yeah, don't be a stranger, Casey. Thanks for the time.
I appreciate it. Stay tuned for more Moving Iron podcasts after these messages. Mark your calendars for the 2025 Moving Iron Summit, September 24th through the 26th in Austin, Texas. We'll dig into what's happening in the used equipment market and how dealers are adjusting. It's a chance to connect with others in the industry, share what's working, and get a better handle on what's ahead. You want to be part of the 2025 Summit? Visit movingironllc.com for all the info. Hello, and welcome back to Moving Iron Podcast. Got Aaron Findle back here with me to discuss what's going on in the world of equipment. Aaron, how you doing this morning?
I'm terrific. And yourself?
Doing all right, man. It's been an odd few days out here in the Panhandle, man. It's from 90 to 40. You know what I mean? It's spring in the Panhandle, man. I'll tell you what.
Yeah, and wet.
And wet. Yeah, we don't usually get that either. Usually we get one extreme or the other.
Thing. There might be some hay after all.
There might be. Graduation this weekend. We had my son graduated, Aaron's son graduated, and
your first, my last.
Yeah, we shuffled him off into the world. So it was fun. Good to see that. I always like it's a kind of a cool journey. You know, you get to see what you like. I told my wife, she's like, "What do you think? What do you think is going to happen with Ben now?" I was like, "I don't know, but we've done all we can." So on to the next one.
Oh man. Yeah, it was a very lots and lots of football related things in the class slideshow, and
yeah.
Oh, it was my eyes are well flushed. I'm gonna leave it at that.
Yeah, it was
we did some tear duct flushing and all as well. So
yeah, there was a lot of cool stuff out there to see, and that was it's really cool to watch them. All our friends get together. It's kind of cool to watch them.
Yep.
Watch the kids you watched since grade school, and then realize they're 18 now and they're off in the world. So pretty cool adventure.
For sure.
Today I want to talk a little bit about what we see happening in the marketplace as far as numbers go and just inventory. And like we've talked about here, if you listen to this podcast at all, you've been able to pick up on about the four things that we talk about here a lot: planters, combines, over 175 horsepower tractors, and sprayers. And to me, those are the market movers. Those are things that kind of determine the overall health of the marketplace. You can argue that, hay equipment is in there, and you can argue that, forage harvesters and those kind of things. But to me, those are just on the fringe enough that unless you specialize in hay or forage or something like that, that's their initiative. Brown balers and those kind of things, big square balers, seem to make their way through the marketplace in a good shape. So even during the worst of times, you see balers moving, those kind of things. But I always look at combines, tractors over 175 horsepower, sprayers, and planters, because I think those are the sticking points out there in the marketplace. So real quick, as you look at this time of the year, this is the first half of the year, typically the biggest bulk of those machines show up during that time frame. You have first quarter deliveries of combines getting ready for wheat, so you typically see inventories inflate this time of the year. Tractors, you see a lot of tractors get delivered this time of year as well. Planters obviously get delivered the first half of the year, if not the last quarter of the year. And then sprayers, same way. You see them show up January, February timeframe. So really, those machines are really the biggest bulk of them show up the first half of the year. And then combines, you see another big chunk show up in that last quarter of the year ahead of corn harvest. So looking through there now. So I pulled these numbers yesterday. I went back and looked at basically January 1st of every year going back to 23. And the reason I picked 23 was what I considered to be the bottom, that first quarter of the year, the bottom of the market as far as inventory goes coming out of COVID. And if you look at most machines, that they kind of hit the bottom there and they started coming up from that point. And then till today, I mean, as of yesterday and today's date is the 20th. So I pulled these on May 19th of 2025 to see that. So you've got January 1st of 23, 24, 25 plus as of about middle of the day on the 19th of May. So what that looks like. So Aaron, as you're looking at this, before we start pulling up numbers, what's your feeling right now at the conversations that you have? It kind of feels like the buying that we were going to see kind of happened. It feels like it's kind of settled off to this new kind of plateau where we're going to wait to see what happens after planting's done, and we have that bereavement there between planting and harvesting. You'll see some more pop up. And I guess, what's your feel right now for the marketplace?
I agree with that. We had I would say second half of February, all of March, all of April, really, was pretty good traffic, pretty good action.
Kind of.
And as quiet as it was before that, it got that quiet right after, you know? So to your point, the spring season buy-in got handled. There's still plenty out there, obviously. There will be for a while. But those guys got their buy-in. You know, we've talked a lot on here about last minute stuff, and the last minute has finally got past the last minute, if you will. So that with that pushing so many sales, that's kind of curtailed also, because I mean, there's more social media posts today about being done planting than, you know, fighting the battle or whatnot.
Right.
There's pockets that are really wet, but they are what they are. Back to something we talked about last week or week before, that planting window can almost be 30 seconds because everybody's set up for it.
Right.
So they can make a lot of hay in short order, if you will.
Yep.
So the market itself has gotten far quieter now that they're in the field, done in the field. The combine world is slowly waking up, if you will, very slowly.
Kind of.
Yeah, I mean that's just kind of where everything's at. It's in a very, like, as we like to say, I don't know what to do with my hands.
Yeah, it's just kind of we're in that tweener stage right now where people are going to look at, you know, for as much as the market wants to make out planting season being this gumdrops and candy canes and it's been the best planting season ever, there's a lot of spots out there that have not done that. You know what I mean?
Right.
If you look at the Corn Belt, I mean, yeah, they're great. There's some places that have, it's kind of the tale of two tapes right here, right? You've got, either you really had it easy and it just was the simplest thing on the planet to make things happen, or it was, you got tons of rain and you had to mud stuff in, and you got, you know, the stuff up where it's been too cold to plant in some place. I mean, it's just, there's been lots of problems, you know, and replant those kind of things. But
well, to the Western Corn Belt, even from, I mean, geez, man, from Des Moines West.
Yeah.
Granted, that's also a lot of fringe, but from Des Moines West, it was wait to plant because there's no moisture.
Yep.
You know, Eastern Nebraska is as dry as we were. Well, kind of. But if you ask them, they are. But they don't realize.
Yeah.
You know, so yeah, that's just kind of where we're at.
Yep. And, you know, Chip Nellinger brought something up last time he was on that made a lot of sense there. He said, you know, if you're going through a planting situation where it's been really easy, it's probably really dry too. That's why it's easy. You know what I mean? Right. So he goes, there's that situation there as well too. So kind of tons of rain have happened. We've seen plenty of crazy storms through there, but it's not been as easy as people want to make it out to be, I think, in the marketplace. So, well, it'd be interesting to watch and see what happens. Now, this is the time of year where after things get planted, everyone sits back, takes a look at it and says, what's my stand look like? What does my yield projections look like? Well, those kind of things. They start making some guesses, you know, about the 4th of July time frame. They start looking at, you know, knee high by the 4th of July type of thing, and they start looking at,
which is now chest high.
I know, right?
Tasseled out by the 4th of July.
Right. And so you're seeing where things are at. And so basically by the end of June, going into July, you start seeing some things start to break loose on the equipment buying side of what people may or may not need to fill some gaps as they look into harvest. So right now, I want to share this real quick. I put this together before we started doing this, and I'm going to show what we're doing. All right, so what I got here is basically this is went back and pulled up the reports from the first of each year from 23, like I said, through 2025, and then as of yesterday, the 19th, when we recorded this, when I pulled this stuff out. and I pulled up everything that was there. Again, like I said, I think 23 was the bottom of inventory for most pieces of equipment, and for sure where things took off and ran, sort of back up. As you can see, the graphs kind of illustrate that a little bit. But the one thing about row crop tractors, something I want to talk a little bit about. I was definitely scared of what row crop tractors would look like going into 2025 and how they would respond. Now, right now, row crop tractors they're down 585 from the first of the year. Number of machines out there. You can't. Sorry for the eye chart, but that says 18,002 machines as of January 1st, 2025. And as of May 19th, there were 17,417 machines out there. So if you look at how those things pace together and what they look like, I wouldn't be, to me, that's a trend line showing that inventory is starting to go down. I need 2 more months to see what that looks like, because you and I both know, Aaron, that 500 machines fluctuation in a month is not too terrible crazy to see. So we'll see what that looks like as we go. Now, the bright side of that is, as I look at this, we are at a time frame where you should see machines elevating in inventory, just because the number of machines that get delivered. So there may be some glimmer of hope there that we could see some things start to trend down next month. We'll have to see what happens.
My take is, you're looking at 2 years of 45-degree trajectory up with a very slight slant downward.
Yeah, right.
What I like to see, and in a way tells me health. It's not the number of machines, because running 1 PO, running 100 POs, whatever, right?
Yeah.
It's, are they moving? Just period. Moving in and out, in and out. They're moving in and crawling out. Flying in, flowing in nice and healthy, and then there's a trickle on the back.
Yep. And I think that's the scenario we got to pay attention to.
And it's funny to see where tractors and combines start.
Yeah.
How far apart they are. And what tractors did for 2 years.
Yep. Yeah, because you look at the combine one down here, which is this one down here, the second line down.
That red line just screams, "Hey, guess what? We have a tractor problem."
Yeah, but you look at the combine marketplace, and since 23, you've seen the climb from 2023, where you see 8,180 combines January 1 of 23, and then you see 9191 on 22, and then you see 9737 for 24, and
24 and 25.
25, I'm sorry, 25 on the 9737. But then we see a pretty good jump. Since the first of the year.
That's a healthy spike in all honesty.
Yeah, so that's 1,300 machines. Yeah, that's 1,300 machines, that almost 1,400 machines up there. So you're looking at a little over 10% increase in the overall machine count that's come up there, which is surprising to me, because for all the conversations that I had with dealership guys, used equipment guys, and those kind of things across the country, I kept getting told that we didn't really sell that much stuff. We didn't really sell that much stuff new. And then, here we are sitting looking at it. And the only way that you get your inventory to climb is you have to introduce new machines into the marketplace. And the only way you introduce new machines into the marketplace, you sell a bunch of new stuff, and that new stuff then generates trade-ins back into that thing. Because otherwise, you're trading one for one if you just trade stuff from used to used. Like you should never see a giant, unless you're trading 2 for 1 or something like that. But that doesn't happen very often. So those kind of things are there. So a little concerned about combines, but again, I would expect to see an influx of machines this time of year. And if sales have been slow on combines through the first half of the year, which I think they have been, I can't talk to anyone that said, "Man, I wish I had more combines to sell." No one's been saying that, right?
No.
So this is one of those deals where you think you would expect to see that, and maybe this is just some of that new deliveries coming in and wait for that secondary sell to come up. So
there's a lot more there, though, because if you look at your year to year, I mean, it's almost exactly 1,100 machines, or right at 1,000 machines every year. So that's your traditional trades, your fleet guys, where'd these other 400 combines come from this year?
Yeah.
You know, that's the.
Yeah. If you trickle along here, I mean, you're looking at from.
Because your chart goes
1,000
back
machines.
far enough that the guy who didn't get his 21 or 22 and got 323s.
Right.
Yeah. That's listed on that would be on the chart. So
yeah, so you got about 1,000 between 23, 24, and you got about 600-ish between 24 and 25. But this is just the first half of the year, right? So that's a big leap to see.
Well, and that's to say too, Casey, you're because we are at a May 19th number. That could get
squashed.
It could get sucked way back down to 9 by the end of the year and looks flat.
Yeah, it could very well look like that. I should probably go back and pull May numbers just to see how that compares to the January numbers, so you kind of see what the halfway point looks like. All right, next thing down here on the planter side. Planter side, you saw a pretty big explosion because there are a lot of new planters got sold between. If I'd had 22 on here, is even 22 would have been down here someplace. But you see this explosion in new planters, which a lot of new planters got ordered that showed up very late in 2022. Missed the 2022 planting season for some guys, rolled into 23, and because a lot of stuff showed up late 22, early 23. Saw a few of those kind of bounce back out. You see a little bit of growth here, but it's that's flat to me, right? You're talking about 140 machines, right? That you're looking at there. So not even that. You're looking at 60 machines. That difference there. So that's pretty flat. We see a lot of planter activity this year, a lot more than I anticipated on the used side, and from 59 to 53, you're looking at 600 machines there, but there was also a lot of trades that came in with that. So there would have been. Typically you don't just sell a planter without having another planter coming in on trade.
Right. Yeah.
So you saw some positive activity there where there's just some planters being purchased that were where they weren't trading the one in that they saw. So that's some positive stuff here. Sprayers have just been on a trajectory ever since COVID, man. They've just been blowing up and taking off and running. There for a while, I remember about 4 years ago, you and I did a podcast about sprayers, and we were concerned that, how are we going to continue to spray because we don't have enough sprayers to cover if we had some crazy thing happen, we don't have enough sprayers to actually cover the landscape. Well, we do now. So we do now. Yes, that problem's been solved. So
everything is fine there.
So as you look at what's going on here. Again, a lot of sprayers got ordered during COVID, and a lot of them didn't show up till, as you can see here, late 23. There's kind of a pattern here that a lot of the stuff didn't show up till later in 23, when early 23 and mid-year 23, and it kind of just went from there. Sprayers have just taken off and run. My biggest concern I see with these two things. Go ahead. What do you got?
I think what's pushed that sprayer thing up is you ready? You love this.
Ready.
You ready?
Ready.
What's made the inventory grow?
I'm going to go
upgrading to tech.
Yep. And that's what I was getting ready to say.
Not for anything on the sprayer, but the tech.
And I think that's what I look at some of the stuff on the planter side, and I would be curious to go back and look at what was sold, what year model was sold, right?
Right.
Were they like 10-year-old sprayer or 10-year-old planters, 5-year-old planters, 6-year-old planters that people were like, hey, I'm going to buy this now and I'm going to upgrade it type of thing? Or that's the same thing though on the planters, on the sprayer side, is that the same upgrades are there. There's so much stuff you can do on planter upgrades or sprayer upgrades. I'm sorry. That you look at this. My biggest fear for these machines right here is what's 3 to 5 years down the road look like? Is there always going to be an elevated number of sprayers out there just because of why would I trade it? My wheel motors are still good. My hydrostat's still good. My engine's still good. I can do wet kits and those kind of things. I'm kind of back and forth on those, how that holds up on the sprayer market.
Just how guys are about all of the systems, if you will. powertrain, hydraulics, whatever on a sprayer. I feel like you could get a guy who trades tractors every year to run a tractor to 10,000 before you could ever get a sprayer guy to stretch.
What's so important to spray, like the spray window for spot stop is so tight.
Yeah, you want to talk about a window, there's your window.
Right. But there's a reason why.
In high plains, because, it'd be great to spray today if it was 5 mile an hour slower.
Right.
And that doesn't happen.
Well, yeah. I mean, also, too, there's a reason why the shift from co-op ASP driven,
right?
I'm going to hire the sprayer out to, hey, I'm going to get a sprayer for the farm now.
Yep.
There's a reason for that. It wasn't because a bunch of money showed up, which that had something to do with it. But, the bigger reason for that was I got rust on my wheat. I got to get that sprayed. Right.
Well, how many Best Way sprayers did I sell 20 years ago just because co-op went up $1 on application rate?
Yeah.
Sure.
Yep. And that's
that was a lot of dollars ago.
Yeah, that's another thing too, is that the reemergence of, you see a lot more pull type sprayers being sold out there than you would expect to see. It just feels like that. I'm not saying like they're flying off the shelf, but it just, in today's world where you can buy a $100,000 sprayer,
a good used self-propelled, yeah.
And you look at what the price of some of these full types are, which are creeping up to $100,000 on some of these sprayers. But again, they're loaded with everything, dude. They have, the row shut off, and they got the same. All it is, if you have isobus connection, you can do a lot of crazy stuff on a pull type sprayer. So you're seeing more of that thing kind of pop up than you've seen in the past. So
I've seen a lot of those pull types go in as a backup situation.
Yeah. And I think let me stop sharing the screen real quick. That's the thing where you see a lot of that kind of stuff creep in there. The planner side to me is, as you look at where inventory is at today, as I watch inventory and see things move, I just don't ever expect to see a huge decline in planner inventory numbers. And the reason for that is there's too many machines that are not on dealers' lots that can be upgraded and put into an upgrade kit scenario.
Right.
So I think, because you can think that, the dealer marketplace is only if you really think about the whole planner population, it's a small fraction of the actual wildlife that's out there, right? You know what I mean? So as you're watching those things move along, that upgrade kit thing is, I think it's going to play a big effect on the overall planner inventory. Now, what's that mean? I don't know. I don't know what that means. I mean, is it a scenario where you can go back to like 2004 or something like that on a planner to get on the deer side, and then precision, you can go back as far as you want to.
Right.
You'll be able to do that. But I think
there's a hashtag about that.
There is. There's a hashtag about that. But there's a as you're watching these things take place and go, the Cornerstone system that Precision Planning came out with, and then Deere's complete row unit system that they have, those things are total game changers as far as upgrading a planner now, right? So you don't have,
for sure,
all you need is a bar. You need a good solid hunk of metal that you can hook these things to and call it good, right? That's really all you need, and that's going to be the defining point, I think, when you start looking at planners moving forward. The combine side, we got to keep watching that. I mean, I don't want to do a month over month thing. I want to look at a quarter over quarter period, because too much can happen in a month over month. You got to look at that quarter time frame and make sure that during that time frame that things have changed.
Right.
After the next quarter, if you see things still moving up on combines, I would get pretty worried.
Just because of what's already there and the dollars tied to them, worried was quite a while ago.
Yeah. No, I mean, worried in the fact that it's nowhere really headed for. It's like a bigger issue than we thought.
Instead of just sitting here in the swamp, we're migrating to the cliff.
Exactly.
Right.
Yep. And I think that's going to be the thing. Now,
we're very familiar with swamp life in Colorado.
Where we're at, the lowlands.
It's called the trudge.
All right, so now let's take one more thing real quick before we shut down. looking at these numbers,
We do.
and the amount of inventory that's out there, my anticipation for the auction activity, I think has gone up now. Like I'm more bullish, bigger auctions towards the end of the year than I was to start with. Still don't think it's going to change the value proposition of machinery, because I feel like retail price and auction value have kind of hit that equilibrium point. To some extent, I mean, not 100%, but I think there's still some ways to go on the retail side, but
closer than a year ago for sure.
Looking at these numbers, I mean, I don't want to use the word purge, but there's going to be some dealerships out there that are going to be in retirement sales too. That's another thing too, is that there's a lot of retirement sales on the books right now if you look at what's going on there. So you couple some consignment sales with some retirement sales, I feel like end of the year auction activity is going to be significantly higher than what I anticipated.
Yeah, it could be a deal.
Yeah. So something to pay attention to, and that's why you listen to Moving Iron Podcast, because we'll keep you guys up to date on that stuff there. You know, that's what we do. So we'll try to keep that in front of you. But as I'm watching this, I think, but that being said, I still think if you're wanting to buy something, today is the best day for you to buy it.
Oh, yeah.
I don't think you're going to have the same kind of opportunity and the same kind of deal at the end of the year, even with the auction activity that I'm talking about. So something to pay attention to, because...
Well, and the other thing is you got dealer psychology involved in there. So if you're waiting because, well, he said there's going to be all kinds of auction stuff, and you're not an auction buyer, but you know, oh, well, I got all this auction I can throw at these guys to get them to sell it to me for the same price, 180 degrees opposite. Because when the dealer has already slugged a bunch at the auction, what's left is fight, scratch, and claw every penny out of it type of deal.
Yeah, they've readjusted the pricing, and they're now
well, and not only that, but you're trying for every dollar because you know
you
those
need to.
8 truckloads of stuff over there are going to bleed to death. So
right, yep, yeah, you it's a point counterpoint type of thing,
right.
So yeah, it's a definitely thing there. Okay, probably a good place to stop. Again, guys, pay attention to what's going on in the auction marketplace. I think you're going to see that. Pay attention to those auction bills that come through. I get a billion emails a day from every auction company on the planet because I subscribe to all that stuff about what's happening, where it's at, and check that out. Go to machinerypete.com. You can see all the upcoming auction data that are auction listings and those kind of things that are out there too. So pay attention to that. So,
and the best auction data.
It is. They have good auction data. So check it out. Machinerypete.com. Aaron, folks want to reach out to you. It's the easiest way to do that.
I'm on the social medias, Facebook, X, whatever, by my name. Call me, text me, 308-760-1193, or you can email me, afintel@21equip.com.
Right on. And I'm Casey Seymour. You can find me at Facebook, Twitter, or Instagram, LinkedIn, TikTok, and you can go to AgWeb to hear the audio version of this. You can also go to the YouTube channel, the Farm Journal YouTube channel, and see us there. You can also go to Farm Journal Now, which is a streaming service that we have at AgWeb. You can also get the app, the Farm Journal app, and it'll have it there as well. You can watch the video version there, so you see all that stuff there. So if you're interested in doing all that, check that out. So for that, I am Casey Seymour with Aaron Fennell, Greg Machinery, Pete Peterson, and Chip Nellier. Let's go smart, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.